Good morning. Welcome to IG's early morning call. It's Thursday, 12th of October. Let's take a look at the headlines as we are looking for another rise at the start of today's trade. There was a little bit of mixture yesterday in terms of the cash session close across the European equity markets. But in today's session, we're looking for a small rise at the start of today's trade. Late yesterday, we saw gains across Wall Street. Fed minutes confirming the growing concerns over the US economy outlook. But broadly speaking, it's seen some positivity come through with this. Meanwhile, today we've got sterling very much in focus. We've just seen monthly GDP figures reported, and it's bounced back from the negative 0.6% month on month we saw last month with an improvement. And we've also got full details of industrial production, manufacturing production, also trade data as well. And in the airline sector, we've seen a trading statement today from EasyJet and reflecting well on where we are in terms of the reporting for the summer season, which has been very strong. Delta Airlines today expected to report third quarter earnings before the market opens. Let's take a look at volatility. We're down now for a seventh day in a row, seventh trading day, that is. So we're almost closing in on 2 weeks trading on the way down, 17.03. And this, I think, really shows how people feel about equity markets. And you can see here, if you look at the London FTSE 100, big gains we saw on Tuesday this week, Wednesday, Thursday, today's session on the 24-hour markets, just being held up by this red line here, which is the 200-day moving average at 76.50. 76.48 is where we're trading at the moment, looking for a stronger start here in the London markets at the beginning of today's session. A couple of companies worth looking at, I'll take a look at in just a few moments' time. German DAX, same sort of price action, highest trade we got here in almost 3 weeks on the German DAX. And the French CAC 40 also taking part as well in the gains that we've seen. So across Europe, we're looking for a slightly stronger start at the beginning of today's session. Let's take a look at what's been happening overnight in the Asia Pacific equity markets with gains on many of these markets. I want to take a look, though, at what's happening in Japan, particularly with this chart here. We've got a rise here at 32,599. Big gains in the session today on the 24-hour markets. You can tell we've got a very strong day today, and we continue to trade up even after the cash close of the session today. So an improvement across many markets in the Asia-Pacific region and the Nikkei 225 in amongst them. Let's take a look as well at what's been happening on Wall Street. I wanted to reflect back on what happened yesterday on the Wall Street close. After the release of the Federal Reserve minutes, which I'll take a look at in just a few moments' time, we saw the Dow, S&P, and the Nasdaq all up on the session in the trading day yesterday. Let's take these apart because I think there's been some significant moves. This is the Dow Jones Industrial Average. And we saw that close yesterday on the 24-hour markets past the 200-day moving average. And today's candle, albeit small, albeit early trade, albeit on light volumes at this trading day, type of trading day, or part of the trading day, we've got the entire candle above the 200-day moving average, which for some people is significant and a reason to buy. MACD pointing up, which indicates to me that there is this momentum improving across the US equity markets. In the Beat the Street show yesterday at 1:30, I was with Angeline talking about this, and I was saying then that I felt there was some more upside to go before we reached a potential headwind. And that headwind is coming just above where we are. We are at the 61.8% retracement on the S&P 500. Today's session is at near 4-week highs. In fact, we're highest since the 20th of September. Let's call it a 3.5-week high. And the markets, as I said, meeting this line of resistance at 43.94, just a point away from where we are. But looking for a stronger start at the beginning of today's session. We look ahead. And Angelina will be back with us at 1:30 p.m. today, UK time, with more analysis on all these markets. And again, like the other markets, very strong day, relatively speaking, yesterday on the Nasdaq and the 24-hour markets, as we see the markets pick up some more steam. And we've got a slightly higher open as well at the beginning of today's session on the US market. So you can see across the board, we're looking for, excuse me, gains, excuse me, on the equity markets today. So now the minutes of the Federal Reserve Open Market Committee's last interest rate meeting were released late yesterday when rates were left on hold, of course, in September. Showed more, there was a wide variation in views on whether any additional interest rate increases would be needed. The balance indicated that one more rate hike would be likely, but while there were conflicting opinions on the need for more policy tightening, there was unanimity on one point, that rates would need to stay elevated until policymakers are convinced inflation is heading back towards 2%. All members also agreed they could proceed carefully on future decisions, which would be based on incoming data rather than any preset path. We've heard a lot about this from many central banks. They want to take data as it comes through. Look at what's happening with the dollar index. On the dot plot, 2/3 of the voting committee indicated that one more increase would be needed before the end of the year. Since March 2022, the Fed has raised its key interest rate 11 times, taking it to a targeted range of between 5.25% and 5.5%, the highest level in 22 years. Now the froth is being taken off this market, and you can see that at the moment, at least, we're down for a seventh day in a row for the dollar basket at 105.27 at 3-week lows, levels not seen since the 22nd of September. Well, now all this leads us into what is arguably the main macro event of the day. Could even be for the week, actually. We've got US CPI data out at 1:30 p.m. today. We'll be covering this in the Beat the Street webinar at 1:30 on the client platform today. Economists expecting 3.6% rise in September year on year, down from 3.7% in August. The rate of core CPI growth is also expected to slow down to 4.1% in September from 4.3% in the previous month. The way to trade this, well, as ever, it's the euro-dollar trade. And of course, this is sort of the inversion of that dollar basket trade. We've got a lot of interest now buying for the euro against the US dollar. And we're at 106.35, which is the line of resistance we've got here because of the lows we had back on the 31st of May. And that line of support at that point was tested there back in the middle of September. And then we saw a break through that. So it's now become resistance, and a break of that could potentially then see us up to the 107.50 level. One of the other areas of the market I just want to quickly cover before we take a look at UK stats is what's happening with sterling as well. Sterling hasn't moved much on what we're just about to see in the UK in terms of the statistical release this morning, but I wanted to show you this chart first just to give you an indication as to how sterling is performing against that weaker US dollar. And we got a break of this line of prior resistance at 123. We're now trading at 123.23. We got the highest there in 3 weeks. This line has now become support again. Monthly GDP coming through 0.2%, which is pretty much in line with expectations. Industrial production falling 0.7% in August month on month. The estimates have been for a 0.2% drop for industrial production. Now, let's take a look at what's happening in some of these companies worth looking at the start of today's trade. I want to dial in with a chart for the restaurant group because this is going to be one of those stocks worth watching today. The restaurant group has come through with news this morning. Let me just see if I can get the share price chart because it has now sold out with a deal whereby it is going to, it doesn't look like we're going to be able to get that up, but take my word for it. We've got a close last night at 39 pence a share. We've got a bid of 65 pence for Restaurant Group, which owns Wagamama's and F&B's, Frankie and Benny's. It's reached an agreement of a recommended all-cash acquisition by Bidco, 65 pence per share, 34% premium to last night's close. And that is now going to be taken off the markets. I guess this will be accepted by many. This company, 65 pence per share in cash. This was worth £5 at one point, the Restaurant Group. So it's a big destruction of value. But nonetheless, we're better off now with that bid coming through than we were late last night. In among some of the other companies worth looking at, I wanted to show you Darktrace shares as well. Could be on the move at the start of today's trade. This stock has been up 114% from the lows back on the 30th of January this year to the recent highs. We've got a first quarter trading update and a reported earnings per share number, 28% year-on-year revenue growth in the quarter, confirming the full year 2024 expectations. Darktrace says it's benefiting from people moving into AI and also with its cybersecurity business benefiting from a lot more interest in people wanting to be protected online. Yesterday, Darktrace ended down 1.5%. For me, these numbers look pretty good, although they do say it's in line with expectations, but nonetheless, it shows this company is expanding. The stock will open at 392 pence per share. We've seen a fully updated number coming through for the trading statement for EasyJet. EasyJet expects to deliver fourth quarter pre-tax profit between 650 and 670 million. Passenger growth up 8% year on year. The company says it's seen a record second half headline profit before tax expected to be between 850 and 870 million. Why? It's because of a 7% increase in passenger growth as a result of interest for travel over the summer period. EasyJet Holidays, it says, continues to outperform and is expected to deliver around £120 million of pre-tax profit for full year 2023. Direction of travel for EasyJet, it's not been an easy ride. And as we've been hearing in the last 24 hours, the tragedy that has befallen many, thank goodness there's no loss of life with that dreadful fire at Luton, EasyJet's home airport, where something like around about 1,500 cars were had to be abandoned because of the fire. And this meant that EasyJet has been amongst those airlines that have finding the going tough yesterday because of cancelled flights. Flights are now back up and running. EasyJet yesterday was down 1.75%. The stock today, could we see a recovery of that lost ground today? 432 pence is where that stock will open. If you are long on this, stock goes below the 430 pence level if you're long on EasyJet at the start of today's session. Meanwhile, staying in the air, Delta Airlines is due to report before the US markets get underway a little bit later on. It's a third quarter figure. Strong demand is expected to be seen for both leisure and corporate travel, and that is likely to have positively impacted the performance. Earnings expected at $1.97 per share to be compared with the $1.51 reported for the same quarter this time last year. Revenue is also forecast to improve to $14.5 billion from $12.8 billion this time last year. Same sort of story that we've been hearing for EasyJet. Delta Airlines is all sessions on the IG platform. If you look at the share price chart here, we were up late yesterday for a second day in a row. The stock will open at 9 o'clock this morning. You can trade this when the numbers come through before the US opens a little bit later on today. Also expected before the bell today is a stock which doesn't trade all sessions, but it will nonetheless be of interest. Walgreens Boots Alliance reporting yesterday. We've seen the incoming new chief executive take over, Tim Wentworth. Earnings expected to come in at 69 cents a share. In the same quarter this time last year, EPS was 80 cents. So there's a bit of reduced value there expected in terms of earnings. Revenue forecast to increase to 34.8 billion from 32.5 billion this time last year. Like a lot of retailers, inflation means that the companies had to take a lot of that on the chin. One of the interesting things I think will continue to be is whether or not the new incoming management will want to shed some of the recent or the interest in Boots. Some of the recent speculation is that it does want to get rid of Boots, the UK chemist chain. It's just a question of who wants it and at what point. Let me just dial in another chart worth looking at this morning. This is Ford Motor. It's an all-session stock. Watch for some activity at 9 o'clock this morning UK time. The United Auto Workers Union has expanded its ongoing strike by shutting down Ford's biggest plant. The UAW said 8,700 workers walked out of the truck plant in Kentucky in response to Ford refusing to move further to contract bargaining. It's a sharp escalation of the strike against Ford, General Motors and Stellantis, which began last month. You can see that Ford has recently been bumping along the bottom, although in the last few days, with a hope that some sort of agreement could be reached, there was some hope. But yesterday we saw the stock down 1.47%. This escalation of the strike against Ford is likely to see some more downside at the start of today's trade. This is a company which will start at 9 o'clock this morning on the IG platform, all sessions. After the closing bell last night on the cash trading day for Microsoft, the company announced that it's received a tax bill from the US Treasury for $28.9 billion, plus penalties and interest. Now, as I said, this is an all-session stock, and I think it'll certainly be interesting to watch how it travels this morning. More details emerging overnight. Late yesterday, the stock did gain 0.5%. This figure of $28.9 billion, which Microsoft disputes, stems from a long-running IRS investigation into how Microsoft allocated its profits amongst countries and jurisdictions in the years between 2004 and 2013, according to the securities filing. Critics of the practice, known as transfer pricing, argue that companies frequently use it to minimize their tax burden by reporting lower profits in high-tax countries and higher profits in lower tax jurisdictions. I want to go back and take a look in some more detail about the long-term chart for this. This is the area down here back in 2004 to 2013 they're talking about, and the company was far smaller than it is now. Microsoft will open at 9 o'clock this morning. It says it will be making an appeal against the decision, a process expected to take several years. Just to put the Microsoft tax bill of $28.9 billion into context, Microsoft's market cap is $2.5 billion, and it has $111 billion in cash as of the end of June this year, according to the company's latest declaration. Now, let's take a look into more detail of what's happening in the price of oil, because yesterday we saw a big move lower in both Brent and WTI. You can see the chart here with that big red candle yesterday. Brent now trading at $85. Yesterday evening, the American Petroleum Institute data showed that US crude stockpiles swelled by around 12.9 million barrels. Admittedly, refinery run rates are much lower due to the autumn maintenance, but fuel demand is also slowing. Gasoline inventories rising by 3.6 million barrels. One of the reasons as to why we saw a big drop in the price of oil yesterday. If there's a drop in the price of oil, there's a gain in the price of gold. Gold up again today. We are now at levels not seen since the 27th of September, so near 3-week highs for the price of gold as people continue to seek out safe havens around the geopolitical turmoil at the moment in the markets. That's it from me. We're back at 10:30 with Charting the Markets. Do watch out for those stocks at the start of today's trade, where we've seen results coming in from Dark Trace and also EasyJet. But also do watch out for the restaurant group, which is expected to rise that 65 pence, as it looks like it's going to be taken off the market with that bid by Bidco.